But let's keep the spotlight then on MRPL. Talk a little bit more about the excise duty cut impact on inventory, what the outlook is in terms of their Singapore GRMs, which are at a lifetime high, and the fact that the stock has done very well in the last few trading days. Mr. M. Venkatesh, the managing director at MRPL, joins in on the show. Thank you so much for taking time out. Let's begin by just addressing what investors, I'm sure, would really want you to address. The fact that in 2022, the stock price of MRPL has gained over 170%. The single most important factor that led to this surge, of course, is the rising Singapore GRMs. Now, just a few days ago, the Singapore GRMs touched $25 per barrel, and as we speak, continue to trade over that level of $20 per barrel. Firstly, how much of this is sustainable, say, over the next 1 year? Do you think that your Singapore GRMs could sustain at least that $20 per barrel mark for the next year?
Very difficult to predict the international scenario given the current circumstances. But certainly the last year Singapore GRM margins were in single digit. So this going forward, this financial year, we expect it to be higher than what it was last year. But sustaining at $20, $25, very difficult to predict. It all depends on the geopolitical scenario.
Fair enough. It is a little bit difficult to predict. But the question is, do you think that we could see, your GRMs dropping going forward? As you said, the geopolitical concerns remain a little bit uncertain. But if we were to see some sort of a resolution coming in, what's the expectation?
Already it is pretty high. Unexpected, never ever seen such kind of Singapore margins or product cracks. So we are not very sure as to what will happen, but the pressures on the product demand and the product availability will remain.
Mr. Venkatesh, good morning. Obviously, higher gross refining margins is good for your earnings, is good for your business, is good for your balance sheet. We get that. Just given the kind of volatility, I'm not going to put you in a spot and ask you that, where do you see GRMs this quarter? $120, for example, is back on our screens for crude oil prices. But, working backwards, can you give us a sense of what's the impact on GRMs, let's say, when there is a $1 increase in crude oil?
Given the current exchange rate, rupee to dollar, any increase in the cracks or resulting in Singapore GRM, calculated GRM by $1 per barrel, we are expecting to generate a revenue of around 700 to 800 crores.
And then downstream, how does that impact earnings?
Yeah, it's right away, it comes down to the bottom line. While we say that our operating expenses, we require about $4.5 to $5.5 per barrel to cover all our operating expense. Anything beyond that will be generating profits for us.
So what are the current refining margins looking like for the company?
We track the Singapore GRM, which is a globally published GRM. We should be able to capture quite a significant quantity of the margins available in the market, keeping in view our sustained physical performance for the past 3 quarters. Our Q1 performance also is pretty good. While we are operating a highly complex processing setup, there could be 1 or 2 upsets. But at the end of the day, the way we delivered Q3 and Q4, we are expected to look better for Q1.
Right. Mr. Venkatesh, earlier India's import of crude from Russia was minuscule. But based on media reports, Russia crude is now available at a high discount, and hence refiners have increased their imports from Russia from around 1 to 2% earlier. The imports have surged to as much as 18%. Can you tell us how much crude have you been importing from Russia or are planning to do so, and at what prices are you getting them
now? These are price-sensitive information, and we are in a highly competitive global scenario. Looking at the geopolitical scenario, I would not guess and hazard as to what could be the discounts or what could be the volumes we are sourcing. But I would like to inform that based on international law or international situations, we are looking at sourcing any crude which we are allowed to source while meeting the conditions.
And have imports increased compared to what we witnessed earlier?
It's anybody's guess. Right now, the market information is that Europe is having certain self-inflicted self-ban, and Russian crudes are trading low. But there could also be an element of cargo insurance, freight, and aspects like that while the landed cost is arrived at. So we should not get into specifics on what could be the value of the crude at the end of the day.
And given the fact that Brent crude prices have now continued to surge above the $120 per barrel mark, a lot of experts are talking about how it could be hovering around $85 to $90 a barrel once the war settles. What's your outlook on crude?
In my view, sustaining at 150 or 120, what we are having today, seems to be pretty difficult to the global economy. Once the geopolitical issue is expected to be sorted out, if it gets sorted out, we would see some softening of the crude oil prices. But it's very difficult to say sitting in an office, because as we know, it also deals with sentiments. It also deals with product and crude demand. While the Saudi OPEC has informed that they could be increasing the crude oil production, but it has to be looked into as to what actual barrels flow into the market.
Sir, if we could zoom out a bit now and talk about future plans, any restructuring, reorganization. We saw the board approval come in for the merger for the OMPL part, but for many, many, many years now, I've been tracking oil and gas for 15 years. There's been so much buzz. Will MRPL be taken over by ONGC? Then it was, will we see a merger of MRPL and HPCL? What's on the table? What's not on the table?
We have completed the amalgamation of OMPL into MRPL as on 1st of May, based on the Honorable Ministry of Corporate Affairs orders. While we complete one of the steps in the amalgamation and consolidation of the group companies, I would like to once again reiterate that HPCL and MRPL amalgamation, the other way around, MRPL amalgamation to HPCL, I would like to leave it with our promoters, both HPCL and ONGC. At an appropriate time, decisions will be taken.
Okay, so at an appropriate time, you will tell us if anything is going to happen with vis-a-vis HPCL or being subsumed completely by ONGC. So one more forward-looking question. Fuel retailing business. How many outlets do you have? Are you looking to open more fuel retail pumps this year? What's the plan?
Yeah, so that's a good question. We have been authorized by our board to set up about 500 to 600 retail outlets in the state of Karnataka and neighboring state. We are operating about 36 retail outlets now, very small compared to the participation or the presence of other oil marketing companies. But nonetheless, we are moving ahead with another 300 or 400 outlets in the next 3-4 years time, or 2-3 years time. So we are coming up in the footprint of retailing in the state of Karnataka and the neighboring states.
Right. And any planned maintenance shutdown which can be expected going forward? And were there any disruptions because of the inadequate water supply?
We have resolved the water supply issues. While we have commissioned our desalination plant, seawater desalination plant this December and January. The plant is fully commissioned and up and running. So we are pretty confident that we should never ever get into water crisis. Even if the water inflow into the river falls down. That's number one. Number two, whatever maintenance we had to do, we got it done during the second COVID wave, and we are not looking at any planned maintenance shutdown till August and September next year, please.
Right. And the current number of outlets, how has the volume trend been like?
So the number of retail outlets is just about 36. So it's pretty small, and volumes are also equally small. It's a very small number compared to the number of retail outlets required to become a significant player in the market. But we are getting into it. Per retail outlet, on an average, if you take, it's about 150 kiloliter per month of diesel and petrol put together, or 120 or 170, depending on the location of the retail outlet and the volumes we get to sell from a particular retail outlet. So it's a very small number.
All right, and what's finally the outlook in terms of your Capex plan over the next 2 to 3 years? Are there any major projects being taken up, given that the company will be generating very strong cash flows, or are you looking to reduce debt?
Our primary focus will remain to reduce our debt, while we also try and look at consolidating our projects which are ongoing, minor in nature as of now. But we require additional floor area. Land is being acquired, and once we start generating cash, which we are doing as of now, we would be looking at investments for crude to petrochemical, to intensify our petrochemical intensity and reduce the diesel production going forward to meet the challenges coming up in the next 5 to 10 years time. We would be looking at investments in green hydrogen as going as way forward, and reducing our energy cost by sourcing power from grid, as well as green power from grid, and minor Capex in the next 2-3 years to consolidate our position. As I told, beyond 2-3 years, we should be looking at getting process investments, what we call, for upgrading the product slate from a fuel slate to a more of a petrochemical slate.
Thank you for taking time out and giving us a sense, Mr. Venkatesh, as to what the outlook is for the company, as well as the view on your GRMs. So looking at sustaining at $20 to $25 per barrel, but the management acknowledged that that's tough to predict, and they plan to expand their footprint in Karnataka. Primary focus is debt reduction.